ask specific questions, I am going to ask people, panelists, in terms of give us a sense as to what their current level of operations is. So, Mr. Ghosh, if you can tell us about, your new, the plant, what the investment is, what the capacity is, and maybe briefly just that. I'll therefore follow-ups after that.
Thanks, Alok, and always a pleasure to be at your conferences. Thanks for having us. First Solar is the world's largest manufacturer of thin film photovoltaic and offers a module which is very differentiated from the crystalline silicon part of the technology, both in terms of the way it's manufactured, also the kind of materials which go into it, and its performance, especially in hot and humid climates. So we are currently establishing a vertically integrated semiconductor to module 3.5 gigawatt per annum production facility in Tamil Nadu, in Sriperumbudur. Total capex, total investments about 5,600 crores. We broke ground in November of 2021, and we should be, starting our trial production next month, leading to full commercial operation with fully certified BIS ALLM compliant modules by October of this year. This would, for solar's been in India since the last 10 years. We started our journey in 2011 selling our panels which were manufactured in Malaysia or Vietnam and the US to Indian IPPs. 2015 to 2018, we did a bit of project development where we built utility scale assets. And today, we have about 2.5 gigawatts of operating installed base in India of our modules. All of it is in utility scale, large utility scale applications. And as we start commercial production, we hope to provide to our customers technology which has zero dependencies on China, zero dependencies on silicon, and we do hope to bring in, and we already have brought in predictability in a market which is very uncertain, as one of my fellow panelists was chatting with me. We are uniquely positioned with our supply chain and bill of material and process to bring in predictability in terms of pricing, in terms of performance of the module, and in terms of schedule and availability of our products in India.
Okay. And what are the key milestones you have over the next few years?
So in terms of key milestones, Alok, as we start commercial operations, our first key milestone would be to get to full capacity. When we start our operations, we will not be at full capacity because it takes us about a year and a half to ramp up the manufacturing facility to be at full nameplate. Thereafter, we would strive to achieve the localization and efficiency thresholds for our module, which are required under the PLI award which we have. So we have about 36 months to demonstrate about 70% localization in terms of the bill of material and 20% nameplate efficiency of our module. And we hope to get there even before the 3 years, but that's the next milestone so that we are eligible for the PLI grant which we have received from the government, which is roughly about 1170 crores. Once we start, then we get the dispersal over a period of 5 years from then. So those are the first two key milestones. Thereafter, we would be definitely looking at incremental investments to keep our technology upgraded in consistent with what we do globally across all of our factories.
And how is your technology different, and what's been the response of potential customers to that?
So our technology is different because we use cadmium telluride. That's a semiconductor we use. We use very little quantity of semiconductors. Our biggest raw material is actually glass. 65-70% of our module is actually glass. And then there's a bit of the aluminum or the steel frame which we use. So from a bill of material standpoint, it's very simple. It's very consistent and it's very traceable. And of course, nothing comes from China, so we're not kind of hostage to the vagaries of the polysilicon supply chain,
Right.
both in terms of availability and pricing, right? From a performance standpoint, it's different because it has got a slightly lower efficiency on the nameplate, but it does produce higher energy, especially in hot and humid climate, anywhere between the two tropics. Our technology would deliver more kilowatt hours for the same installed kilowatt peak over the lifetime, about 5 to 7%, depending on where you are. And it's a glass module, so it's dual glass, and which kind of brings in a lot more reliability, long-term reliability on the overall package, as we warrant these modules for 25, 30 years of usable life.
And what would be the cost economics be compared?
From a cost economics or a price economics?
Cost.
Well, I mean, First Solar has always been the lowest cost producer of photovoltaics. And because if you look at our manufacturing, if you look at the capital cost per gigawatt of new production capacity, we are lower. If you look at how much energy or how much water we use in our manufacturing process, we are lower than silicon for the same equivalent capacity produced. And so from a cost standpoint, we have always remained more competitive than our competition. However, we've had several occasions in the evolution of the industry where our competition has been selling below cost, so they're pricing below cost, which leads to dumping. Right. But from a cost standpoint, we remain very competitive simply because if you compare and contrast us with the polysilicon to module manufacturing value chain, any capex which goes upstream of the wafer and the material is not applicable in our case.
Right.
So we will always have that advantage over our competition.
Over cost, yeah. Okay. If I can now go to Mr. Srivastava. Mr. Srivastava, wonderful to have you here. Could you give us a sense about Waaree in terms of where, what are the different product areas that you have? What is the scale of operations you have now, as well as what you're likely to have in the future?
Thank you, Alok. Good afternoon to the audience, and a difficult time after lunch, so I'm not going to bore you with too many statistics. Waaree Energies Limited, the flagship company. So while most know Waaree as the most successful, largest manufacturer of modules, we are transitioning into a company which is both into manufacturing and even more a solution provider in the entire new energy gamut. Now, what does that entail? So let me first talk about manufacturing, because that's the contemporary topic here. So in manufacturing, in the last 20 months, and I think I don't need to speak much because everybody whom I meet says today's economic times, yesterday's business today, because of the fundraising that's happening so successfully. So figures are known, but yes, we have grown from a nameplate capacity of 2 gigawatt now to 12 gigawatt, the last gigawatt getting commissioned in this, or probably the next month. That's on the module side. We are also in advanced stage of the 5.5 gigawatt of cell manufacturing plant. It's delayed from the original timeline, but it's on course for commissioning by year end progressively. So this financial year, we will have 5.5 gigawatt of cell. The PLI results are out in the public domain. So we have 6 gigawatt of ingot, wafer, cell, module, which we are already in advanced stage of engineering, etc. So combined together with that, since Alok mentioned what would be the milestones, the milestone would be to reach 20 gigawatt of module manufacturing, about 11.5 gigawatt of cell manufacturing, and 6 gigawatt of basically wafer manufacturing. That's on the SPV side, as we call it. Simultaneously, we are also making forays into energy storage in the early stages of putting up a gigawatt factory for battery energy storage, lithium-ion batteries. And also we manufacture solar pumps, cables, etc. That's a business very well known. besides the manufacturing side, we are country's largest, we have a retail chain, you can call it almost like a Starbucks chain, spread across more than 300 locations, which not only provides modules, but even to the last mile customer, the installation support, the installation, commissioning, all the support that you can look at. We service, in fact, not only just the last mile customers, but about 10,000 integrators who are very closely linked with us. So that's the service providing side. And then we are also selling storage through that, and we have made some early inroads into that. And on the other side, for the large customers, we are very well known as a group company which is listed also, Waaree Renewable Technologies Limited. We are closing in on a 1 gigawatt kind of a EPC book order. And that's where we are. We are currently, since most people have asked me, the largest supplier to North American markets out of the Indian module manufacturers. That's where we are, if I can sum that.
And what percentage of your revenue comes from exports?
The audited results are going to be out for last year. Let's wait for that.
Okay. What was it before that?
I won't like to be misquoted on that.
Okay. All right. Okay. Same question that I'd asked earlier from the developers. What are you generally happy with what the government has done for you guys, or are you looking for them to do more?
What we are happy is that after years of dithering on the BCD, it has finally happened. Mm-hmm. And what we are also happy with is, I'll just take a little bit sidestep for as a manufacturer. It's not one thing, it's a triad which is important, basically an anchor or an assured demand. Secondly is the genre of what we call incentives or SOPs, which could be PLI, capital subsidy, lower electricity cost, lower capital infrastructure status and all that. And third is deterrent measures. Nowhere in the world, any industry, be it steel in USA, Germany, anywhere, has survived without a kind of a 3 to 4 to 5 year period of deterrent measures, which can be in any form, and which was ALMM for us. So what happens is, yes, we are happy with what has happened till now, but the step back towards the ALMM, it is not about how much quantity of business gets offset, etc. It's the investor confidence. After all, this business is a very capital intensive business. And so, unlike us who have been through the vagaries of policies, investors want a little bit more assured environment. So that's the kind of step back happened. But I think moving away from the manufacturing side, what we need to look more at is how is the demand going to sustain? And I think there we are very positive, because India has a problem, as speaker after speaker would have said in the morning. We have done exactly the inverse of what the world has done, where distributed solar is almost negligible, if I can say that. Utility level is very high. Now the policies that are coming up are encouraging distributed solar, which is very important for domestic manufacturers, because we all know the game in utility level, it is famine or feast. But the one that, when I talk about demand, keeps an assured demand is this segment. So that's the good part of it, which is not related to manufacturing, but at a policy level, it is encouraging adaptation of solar as a distributed asset. That is one. Second is on the manufacturing side, yes, PLI is a good step. My belief is we have just begun. The government will also have to bring out some incentive schemes, because as Sujoy also mentioned, the localization element. We need to support the entire ecosystem of suppliers who are required for this. It could be any technology, because not only in terms of producing, but the quality and the scale. That will require a lot of thinking around it. We'll also need to look at staying competitive. Maybe there is a 3 to 4 year period when you are sheltered, but long term, because exports, today the world is hitting a rate of 300 gigawatt per year or more, in fact. If I look at till 2025, it would be 350, out of which North America and Europe is going to account for 100, and after that, about 150 out of 600, that's going to be the run rate from 2025 to 30. It would be a catastrophe if India is not able to address 30% of that global demand. And if we have to be prepared for that, the incentives, the kind of things that we have seen, will need to scale up, also in terms of our thought process. That's what I'm looking at a short term
Okay,
and a long term.
Okay, I'm going to come back to that as well, because I didn't ask Mr. Ghosh that question about the government, but I'm going to do that. Mr. Garg, if I can come to you, if you can first tell us about, just what the level of operations is currently, what is your focus area, and what is it that you're hoping to get to?
So, good afternoon, everyone. Thank you to the organizers for inviting me for this session on manufacturing. Just as a brief introduction to Jakson. Jakson as a group was primarily known, is known, I would say, for DG as a partner of Cummins historically. But I think over the years, the last few years, not several years, the focus has changed, in line with the expectations around sustainability, new energies, because while DG is a necessity considering the power situation in the country, but we are all very sensitive to the situation that we need to have a clean energies, which is the demand of the day. So solar is the something which we are. So we are into manufacturing of solar panels, and we are also into solar EPC. So we do solar EPC, and we also have IPPs as an IPP, which means we set up our own plants also for solar. So it's a complete, after the module, I would say a complete up to the, as a developer, as an EPC partner, and as a product supplier, we are there in solar. We have also a product for energy storage, which starts from 3 kilowatts, and it can go for CNI up to 2 megawatt. So it's again a kind of a complementary solution tomorrow when we are having no restrictions on diesel, because the power situation, until it approves, people need a solution. So that's the second thing which we have. It's already in the market, although because it's a lithium-ion base, so it's not so affordable at this stage, but we are still selling in some quantities to those who can, I would say, afford this, and they don't want to operate diesel sets. We are also into ethanol manufacturing as a fuel. So we have set up a plant in MP, in south of MP, I would say, where we are going to produce ethanol using the broken rice, because that's a kind of a rice belt of India. And that's again going to have some blending with the fuel, so that the emissions which we have are expected levels in the future for clean energy perspective. On the hydrogen side also, we are doing hydrogen. So we are thinking of doing hydrogen storage, or maybe we have already decided to go into electrolyzer manufacturing. So very soon we'll be setting up the electrolyzer manufacturing, because as of date, we don't just have any electrolyzer manufacturer in India. So I said about fuel, that is ethanol. We are into hydrogen. We are into energy storage. We are, as I said, into manufacturing, creating a value chain for the hydrogen manufacturing. So the whole idea is that how do we compensate this the black, what the dirty energy you call, black energy you call, by putting all these new energies which are coming as a technology to the country. And our major focus as of now is to cater to the domestic market, right? Major focus. While we are also thinking of setting up new capacities to cater to the markets which are primarily US market for reasons known to everybody. But then the focus will be remaining that how can we support the domestic industry, because that's our kind of, I would say, the vision behind all this what we are creating in India.
Thank you. And what is your view on what the government has done?
So I think government has, in recent past, this PLI which has come to solar has been a welcome move, and we all know what is going to happen. India is going to have, without PLI, I would say, India added almost like 11 gigawatt of manufacturing of modules in just 1 year, roughly, right? So that was a big investment which happened. We were only 11 gigawatt till March 22. Oh no, sorry, March 21. We added almost like 11 gigawatt in 1 year because of the favorable policy support the government extended by whatever policy measures, BCD implementation, ALMM, whatever you call. but there was a lot of interest shown by the industry, and rightly so, the capacity got doubled in a year. And with the recent PLI, which has been very successful, it's published, it's nothing that I'm selling specific. We'll be around 40 gigawatt of cell by 2026, or 50 gigawatt of cell, and 100 gigawatt of modules by that 2026. So that's going to be a huge number, and possibly, our vision is getting aligned with what Vivek ji said, that India should get prepared to serve the world, considering the capacities which are being added in the developed part of the world, which is supporting India, I would say, in a way, accepting India products, so largely, US, Australia, Europe, whatever you call. So I think this has been very great in terms of support given by the government on the
Thanks.
policy.
Mr. Ghosh, if I can ask you that question, what is your view on what the government has done, and what is it that you would like it to do?
I think from our perspective, a couple of policies from the government, clearly simplification of corporate tax, making the tax rates competitive, 15% tax rates for new manufacturing ventures, which the government announced in 2019 was a big step, especially for capital-intensive industries like ours. If you're going to pay 22%, 23% tax on a business which is at very wafer-thin margins, then the payback period just goes longer and longer. So that was one policy which thankfully has stayed very stable. Subsequently, I think the ALLM regulation started off as a quality control order. It's kind of now morphing itself into regulating what products get sold, of what efficiency. I think we have to wait and watch as to how that one plays out. On BCD, primarily our view is that yes, there should be level playing field to restrict dumping or from across the border. But again, these are temporary interventions, right? Because they can be introduced to create the momentum. But as Vivek said, finally the industry has to be more competitive on its own. And our view is that when we look at a business case, we look at an investment in a country, we look at more fundamental macros as opposed to whether there's BCD or not, because we know by nature tariffs are always temporary. Right. So I won't really go into too much around the BCD. Mm-hmm. But the PLI scheme, again, well thought out, well intentioned, but it took 1 year for the government between PLI 1 and PLI 2. And we really, at the end of the day, all of us sitting on this table were waitlisted in PLI 1. We could have got the incentive a year ago, and by today we should have had capacities come up. Right. We waited for a year, and what happens? US comes up with an IRA, and which is like at least, on a scale, if you look at the incentive under PLI, it's about 2 cents per watt, right? Compare and contrast that with the IRA, where the equivalent incentive will be about anywhere between 9 to 15 cents a watt peak. Mm-hmm. So in terms of just the order of magnitude of the subsidy, there are countries now in more developed economies where everybody's wanting their own supply chain and supply independence from China, right, post-COVID. And I think then it becomes who gives the best deal, right, where the new manufacturing investments come up. And so I think we could have avoided this 1 year of delay, and which brings me to the point as to what the government should do more, mm-hmm, is to not fix something which is not broken. Okay. Right? I mean, you create a policy environment, wait for the impact of that to be felt. It cannot happen overnight. And yes, if we're going to move our supply chain inside the country, it is not going to happen at the flip of a switch. Right. So there is going to be a pain in this transition. And then if you stay focused on the long-term goal, then we should avoid this retrospective, rollback, right, of policies which we see happening. Okay. So let's get to a different topic here, and I'm going to begin with Mr. Srivastava this time. Mr. Srivastava,
sort of related to previous answers, but maybe separate. What are the big issues and concerns and risks as far as you see for Indian manufacturers?
For Indian manufacturers, I think consistency in policy implementation is the single biggest thing. And I'm again saying not just related to manufacturing, be it on the RE, generation, deployment, utilization side, because ultimately what are we serving? We are serving that segment which creates that demand. So I think fundamentally this tussle, if I can say, or the confusion which is going on between what the center and the policymaker desires and mandates versus what happens in the state, and some of them are retrograde measures also. From our point, maybe the states are right in doing that. But ultimately that leads to a policy paralysis state. And I'm saying this because the larger vision or the larger goal that we have set ourselves for, which is deployment of 500 gigawatt of renewable energy, we are losing time. In all this, what's happening is every year, we are trailing by almost 50% to what was thought of. And on the distributed solar side, it is actually we are lagging by 70% because that's where these policies have a larger impact. So, while we see several T20 matches now in IPL where the last 3 overs people can hit, but that probability is actually 1 in 5. So let's not bank on that probability, have a smoother run rate than trying to do everything in 2029 and 30 more as an emergency rather than as a way of doing business. That's one part. The second part, as I said, is sometimes policy, I keep the distinction between mandating and facilitating. The government's biggest role, and even the private sector's biggest role in collaborating together is for facilitation. I think before it is too late, Sujoy talked about markets which have surprised the USA, IRA, etc. If India fails to catch this journey of serving the global boom in solar, which is happening, we would have missed out on a big opportunity. While, as we say sometimes, what is the addressable market? Everybody is talking about, when I get a question about, India has spoken about 30 gigawatt per annum, is domestic manufacturing geared for that? I always say that's a wrong question. The question should be, the global market is going to be this much. If India has to get a minimum 30% market share because of the geopolitical reasons that everybody believes we should be getting, what are we doing about that? So I think fundamentally that proactiveness now needs to come in. We seem to be still mired in that debate between who is right, developer or manufacturer or policymaker. I think that is inconsequential. We are spending too much time on issues which are legacy issues. And there's a very famous quote in automobile. They say rear view mirror is meant for occasional looking. You can't drive looking at the rear view mirror. And I think that needs to stop from a policy perspective, right, which is most important. And the second is a little bit of patience. We all know that it's not just a quote, it's a reality. Rome was not built in a day. From just 20 months ago, when the land was so parched, the desert didn't even have an oasis for the manufacturers, to bringing up actually, equipment imported of around 16 to 18 gigawatt, in 1 year installing it and even running it at 45% capacity is not anything short of a miracle. But to say what I keep hearing about quality not being there, etc., that also has got proven because majority of the US imports are happening from Indian module manufacturers. So this, I think the debate that we are getting into about grandfathering, about how to get over legacy issues, is consuming governments and policymakers a lot of productive time. And again, I repeat that sentence, that we should not miss out on the bus on a journey which is right now in front of us. That's my biggest concern.
Okay. Mr. Garg, if I can come to you next, what are, as far as you're concerned, risks and challenges and concerns?
Yeah, so I think challenges are similar. Like Vivek ji said or Sujoy said, keep policy, consistency of policy. We added a lot of capacity because there was a visible directional support to the industry. And maybe rightly so, the government again extended ALMM this year, a lot of hue and cry because capacities were not up to the mark as desired. But then, as he mentioned, no, all these knee-jerk reactions, they give a lot of setback to the people who are wanting to invest. While some who have already taken the roadmap, they are going ahead. But those who want to jump in, they wait. They said whether this is really the right industry to jump in, or because the government someday says like this, someday say like that. So I think a consistency of policy, at least for some period. We are not saying it is something which should be forever, no. But at least you give a period, because all these are investments. These are not something which you put money for a year or two. Means it's people putting in cell. The payback is pretty long. So I think one for sure the challenge is the policy stability for the duration, at least, which is sustainable. Second, the challenge as the manufacturers, who are, at least from my perspective, is the still the dependence on the neighboring countries, largely China, be it the RM, be it the machines. So the predictability is very, very something which is not, you can't predict. Means today people ask, some customers, they ask, okay, I want pricing for 6 months. Industry has worked out some solutions, but if you ask a firm pricing, somebody in this industry is not ready to give a firm pricing because of this unpredictability. Because still we are so highly dependent on countries from the RM side, and the way the swings happen, people who are who are either side of this solar industry know how it affects, because you bid for a project considering something which was going to happen, but things are not in our control. So sometimes it is favorable, sometimes totally unfavorable. The second concern as a manufacturer is that on the equipment side, we are still a net importer of machines. So we are importing largely from China or from Europe, right? So barring the technology which First Solar has, largely this industry of monoPERC, poly, or tomorrow TOPCon is all dependent on machines, or even the backward integration. The machines are coming from same countries. So the dependency still remains. All this automation is happening, machines are, continuous manufacturing machines are there, automation is there, software control is in China. So if suppose we are getting trained, our people are getting trained, but still the large part of dependency is on the suppliers, because if things go wrong, means one day production loss is just, and if you don't have a proper stocking or planning or things like that, means you can be, I can tell you as a manufacturer, it can be a big, big problem.
Thanks. Mr. Ghosh, risks, challenges, concerns as far as you're concerned?
I think barring the policy, which, by the way, most countries in the world and most democracies, I would say, have similar policy risks. So
right.
We are no different than others. That's a risk, that's an acceptable risk you take when you want to invest in a new country, right? So as long as the underlying demand is strong, which it is, I think from our perspective as a manufacturer, the challenge we see is the ability of the ecosystem to get built up, right? The component ecosystem. And that's going to take a lot of efforts. The PLI will offset some of that, but the cost of localizing things like glass, for example, or fabricated aluminum or steel, or even things like polyolefins, junction boxes, solutions exist, but that component ecosystem is either not to scale, or they have a cost structure which is not competitive. And if you take all the domestic components, then your bill of material cost would not, you won't be able to meet the market price at which you can generate electricity at 2.5 rupees, right? So that journey of localizing the component ecosystem is extremely important. It's a process which will take time, and again, I think all of us have to go through that pain in terms of identifying suppliers, qualifying suppliers, getting their capex. They would also like to see certainty, especially if you're looking at glass, for example. I mean, we are a net importer of glass today. And if you look at 35, 40 gigawatts of solar panels, you'd need at least 3 or 4 new float lines, which will take 2-3 years to build. So what do you do in the interim, right? And then, you tackle the inverted duty structure and those kind of things. So there is work to be done. I think that's one part of it. The other part, in terms of localizing some of the capex. So, we should be able to start with the simple things like laminators, stringers. Those devices, I just don't see if we're going to have such a big industry of manufacturing. That equipment ecosystem also has to get built, right? And only then we will have true Atmanirbhar Bharat.
Right.
That's our challenge.
Okay. Let me just have a couple of different questions for each one of you. Mr. Ghosh, what are the global cost trends?
Global cost trends?
Cost trends, yeah. What is your expectation for the next few years? What's happened in the last 1 year?
I think the global cost trends are heavily weighed by what comes out of China, which is extremely opaque. I would rather have my two other colleagues comment on it because they deal with that ecosystem every day.
Right.
But, technology is moving. You are looking at, N-type, HJT, potentially, multi-junction devices because you're trying to get to the next level of efficiency. And as the technology moves to the right, the initial costs are going to be high, right? Because the cost will then start to scale down once the production picks up to a certain scale, right? Okay. And therefore, I think that journey of taking a technology which is at, let's say, 1 to 2 gigawatts today in terms of its manufacturing footprint in a 300 gigawatt per annum manufacturing, and take it to be at least at 20-30% of the overall. So from that 1 to 2 gigawatt to a 30 gigawatt per annum journey, will scale drive cost down?
Right.
Is a big question.
Okay.
I don't know.
Yeah, before I go to Mr. Srivastava on that, what's the next level of efficiency that people are shooting for? No, for you, Mr. Ghosh.
Me?
Yeah. Because you mentioned next level of efficiency. So what is the next level of efficiency?
Yeah, I mean, I think you're looking at, mid-20s now for at the module level for N-type, mono or HJT.
Right. Okay. Mr. Srivastava, the delivered cost for Indian producers, what's been the change in the last 1 year and what is expected for the next couple of years?
So, price forecasting is a dangerous business.
Well, you can look back at least and tell us
And
that.
one should stay away from that because whenever I pick up a publication and look at what was the forecast, the good part is that nobody needs to sue them. Okay, so, but there are a couple of trends one has to look at. One is the energy generation per square meter. That definitely has been following the pattern of Moore's law equivalent, and it will continue to. That's because of the advancements in material science, because of nothing else. So material science advancements is going to be the biggest boon for the new energy sector, be it what material gets used, what is the carbon intensity of mining of that, what is the energy equivalent required to convert it into energy production stage and all those things. So I think it is not a very simple answer about the cost, but the material science itself will pivot that. The second part of what is going to emerge is how the commodities are used. Okay, so there is a big debate about, everybody talks about wherever there is a commodity reserve, should we exploit it? And I keep saying that commodity availability versus conversion to meaningful has taught us centuries of lessons. Today, anyone digs a oil anywhere in the world, digs for oil, you will find oil. But is it commercially viable? That's the question. So this is the part that is going to lead the cost curve. Second is the scale. So as Sujoy rightly said, today if the world is operating on an annual fulfillment capacity of 200 to 300, when that scale goes to 650, you will see cost efficiencies coming in all across, right? In logistics, right? In usage and everything. The third thing which is also going to pan out is the cost of financing. I think this sector is now catching the eyes, and that is a very important part, even in India, when we look at what is the financing going to be. And yes, tomorrow there is a session, we'll figure out. Today, even in emerging technologies, the way finance goes in, that's a big cost element. So that's also going to take precedence. Coming to India, what is also going to happen is we are going to incrementally improve. See, module, I don't want to use the word manufacturing, module assembly, which is a very high precision quality control job, versus getting into cell, wafer, ingot and all that, which requires a very high level of knowledge, skill, everything, a lot of human capital that is involved in that, talent density comes into play. Even in module manufacturing, there will be incremental improvements. I have no problem in saying that when we commission a line, during the ramp-up stage, we are very happy to achieve 65, 70%, then going up to 90% is a journey in itself. So that also has an impact on the cost structure. When we do backward integration, so it is not just the Atmanirbharta, it's also the control on the quality. Not many of us are aware that when you import a lot of things, the quality rejection rates and all that also come to play because you are not controlling the supply chain. So it's a whole, I can say the Indian equivalent of biryani that is getting cooked in. What will make it more palatable, even more affordable is a melange of several things.
Okay, all right. Mr. Garg, let me ask you a question about Chinese dependence on Chinese. How do you see this coming down? What is your view on that?
If we have set up huge capacities as which are coming up in India, means for sure this dependency will reduce to that extent. So if let's say today India is manufacturing 22 gigawatt, largely we are importing, right? Some monoperk cell capacities have been just started and they are on a ramp up mode. But tomorrow means, let's say when we are 100 gigawatt of module manufacturing, as I said, the data today says that we will be manufacturing around 40 gigawatt, 50 gigawatt of cells, which means that for that balance 50 gigawatt of module which we are going to make, we'll have to import, right? The other reason which I see that dependency as a continuity is that China has dominated this industry, right? We are doing our best. But let's say the new cell technology which is coming, they are far ahead in terms of adaptation, in terms of investment, that today we all know N-type or cell, TOPCon cells. China has announced so many gigawatts of TOPCon manufacturing, not only 1 gigawatt, 2 gigawatt, in one shot 10 gigawatt, 20 gigawatt. So very soon in this 1 year, I can tell that China will be, maybe Vivek ji has more idea into this, they'll be around 50 gigawatt, 40 gigawatt of TOPCon, while we'll be happy setting up 40 gigawatt of monopark in next 2 years. So I would say that dependency on China will kind of remain because they have been there, they have invested huge.
Yeah, so Mr. Ghosh, what is your view on that? Dependency on China.
Well, I think as we look at our customer base, right, increasingly people are demanding, number one, traceability of supply, right? Clearly looking at how you're not using forced labor in your supply chain. Clearly looking at how dirty your supply chain is from a carbon standpoint. And increasingly we see a lot of the large IPP customers, at least on the utility scale side, who are funded by large pension funds or strategic financial investors, starting to value some of these attributes when it comes to procurement of technology, right? And that's where China has a problem, right? And then you combine that with some of the rampant, trade practices which they have followed religiously over the last decade to essentially weed out manufacturing in other markets. I think that reaction is very natural. And you see...
So if you were the minister of reducing Chinese dependence on China, what are the things, how would you do a roadmap? If you were minister in charge of reducing dependence on China, what would be your roadmap?
I think the roadmap is already set as far as India is concerned, right? You've created a policy where you're incentivizing backward integration in key strategic sectors, not just in solar panels. And it's across the board, semiconductors, high technology items. And I think that is the
So
way
we are already set, therefore.
it's set, but you have to execute it. It requires capital. It requires the industry to also match up.
Right.
It also requires risk taking.
Right.
Right? I think a lot of the investments which happened in China, the government takes the risk because it's all state-funded capital.
Right.
Right?
Yes, I understand.
As opposed to if you look at India or if you look at some of the other democracies,
Commercial rates you're
it's
paying,
all
yeah.
private sector. So I think investors, if they're willing to step up and take the risk in terms of experimenting with new
So
technologies.
our investors, we have now renewable energy platforms which are, Brookfield and which are Canadian pension, funds, etc. Are they just, paying lip service to the so-called concerns about, human rights and labor and all those things? Or are they insisting on sourcing more non-Chinese?
Well, I mean, I don't want to speak for Brookfield or the pension funds. You got to ask that question to them. But we very clearly see our customers, and we've got a book-to-bill backlog of 4 years now.
Wow.
In terms of globally. And a lot of that's happened because procurement policies are insisting on
those.
demonstrating some of these
Can I very quickly
attributes.
ask you, what is your global volume?
So today we exited 2022 with a 10 gigawatt per annum production footprint and a order backlog of 70 gigawatts.
Okay. We're going to take a few questions from the audience, and I'm afraid we'll have time for just 2 or 3 questions, and maybe we'll take. I'm just going to request. I'll request short questions, and I'll decide who that question is going to be addressed to. Yes, sir. In the back, please. Yeah, and do identify yourself and short question, please.
Myself, GN Gupta from Urja Global. People still think that the cost of panel is very high. So what do you think? What should be the basic price of this panel?
Basic price of?
A minimum price of panel.
Minimal price of a panel.
Yeah,
Okay.
per watt.
Some questions can only be answered through an analogy. So when gold was at 10,000 rupees for 10 grams, people said it is costly. At 60,000 also people are buying it, right? So when you need jewelry, you buy it at any cost. Same happens for deployment. It's a pass-through mechanism. Cost of power is related to that. And I think
Okay, so I think
over a period of time, if you look at it, from 310 rupees a watt peak to 26 rupees a watt peak, it's been a journey, and it is going down. So I think there is no ideal cost to it. Ideal cost would be zero.
Yeah. His question is somewhat different. It used to be 2 rupees per kilowatt at one time. Then it became 250. Then it went to 4.5. Then it came back to 2.5, 3. So that also varies. Any other question on this column here? No. We'll move to the yes, please. Yeah. Could you get the mic quickly to him, please? Yeah.
Right now, as you told,
Sir, could you identify yourself?
my name is Dinesh Khandelwal. I'm from Mahalakshmi Polypack. Just now you told that China is coming with a new technology, TOPCon technology, and India we are using recently monoPERC technology. I have 2 questions. How far the TOPCon technology is efficient compared to monoPERC? And second one, the module manufacturing facility which you are putting up here, can it be upgraded to TOPCon technology with some, and what will be the cost?
Okay.
Or cannot be done?
First one, Mr. Ghosh, do you want to answer that? Technology question. Oh, Mr. Srivastava, he'll answer all. Okay. All right.
So, in the last, if you look at the last 16 years, I think there have been at least 7 changes. So change is something that one should not be afraid of. Change is bound to happen. And the question is, the pace of change, and does it leave you stranded? The answer is no. Even in case of poly modules which are still surviving in many parts of the world, but they will gradually fade away. But coming specifically to your question, in one word, answer yes, TOPCon has better efficiency. Are the monoPERC lines capable of being transitioned to TOPCon? Yes. Are they capable of being transitioned to HJT? No. So there is a shelf life of every technology, and be it electronics, consumer goods, each one of them. So that's a risk every business takes. And I think customers are also very well aware of it. And again, as I say, these are all pass-through. Customers ultimately will pay for that. Higher efficiency at the end of the day will lead to that. The second part of your question was relating to? So every technology has its own pros and cons. Efficiency-wise, yes. Material science-wise, no. Cost of raw material is high. Cost of production is high. So once it comes up to scale, at that point of time, this question will have an obvious answer, yes. But at this point of time, yes, TopCon seems to be the winner, going by what capacities are ramping up and everywhere. But if you were to...
Reliance is coming with HDD technology.
Thank you. Thank you.
Well, this is not a forum to talk about
yeah,
specific
please.
companies,
Yeah, yeah.
but you are well aware of that. Thank you.
Is there any other question? We have time for one more question, if there is any. Yes, sir. In the last row. Yeah. The lady in the back.
Hello, I'm Shagufta from Vibgyor Energy. So my question is like, as it was discussed in the panel, that it's more kind of assembly in that we are doing with not of module manufacturing. So like, is there any way where the domestic manufacturers, they can be leveled up?
And who would you like to address the question to? Yeah, Mr. Garg. Sorry.
Understand the question. Can you repeat?
Yeah, can you repeat the question? Yeah.
So we are talking about like promoting more domestic manufacturing of the modules, and it's more kind of assembly rather than manufacturing of wafers and cells. So like any provisions like any way out where we can level up the domestic and promote the domestic manufacturing so that the shortages that we are facing, basically some CNI sections are facing shortages when we are
So
to
you're
meet the
saying
targets.
more module manufacturing.
Okay. So
More backward
your
integration.
question is in two parts. Number one is the backward integration. The answer is yes. The Atmanirbhar policy, everything talks about, be it module, be it semiconductor, everywhere. It's the extent of backward integration in supply chain. So yes, more of cell manufacturing, more of wafer, more of ingot. Polysilicon we'll see when it comes, but even to reach there is a 2 to 3 year period. Regarding the shortage, I disagree, but that we can consider offline. Thank you.
Thank you. I'm afraid we'll